Good morning, everybody. It's Christopher from Serene Education with the 4 majors and update for the 22nd of August, 2013. Good morning, guys. Hope you had a fantastic evening, family and friends. And let's have a look and see what happened to the market yesterday in conjunction with the FOMC meetings that came out, minutes that came out late afternoon. And it seems as though we had a major pullback yesterday with Euro. And you can quite clearly see that it was great having the breakout the day before, and I mentioned that we wanted to see yesterday price closing above this level and ideally on the 4 hour and kicking on. However, that failed to materialize, as you can quite clearly see that we almost had Euro falling or taking back whatever it made on the prior day. So what we have here initially is the signs of potentially a tweezer top at a major support and resistance level, or a prior high in this case. And you can see that tweezer top is primarily a candle that cancels the prior candle. We've had a few here at the support level just recently, where price actually failed to fall any lower around this level here, moving a support. And then we had these candles, these bearish engulfing candles, and then bullish engulfing, and they pretty much cancel each other out at in this case, a support. And we saw price moving higher. Here again, you can see candles failing at a major price support and resistance level here, tweezer top. And eventually what happened was price reverted to the downside. So do we have the same indication occurring here, or the setup occurring at this particular point? Very well do. It very well might be that we are seeing a potential resistance here. So as it stands at the moment now, even though we are upside favorite or long-term positive, and you can see that the actual indicator box over here is looking positive overall, we still haven't managed to actually close above this level. And yesterday's indication doesn't really bode well for me in particular, because it's a clear sign of indecision or negativity in this case at a price of one resistance level. So straight away I'm going to look at more of a negative stance, and then I'm going to look to potentially see if there's any fundamentals today that could actually weigh in that really pull price down. And straight away this morning we have a lot of manufacturing PMI results, and that starts with France. The French market, which actually the flash manufacturing PMI has just come out, and that is lower than the previous figure and the forecast, which is not really good. So we could see that news. And then we got the German flash, which is probably potentially more important. Then we have the European flash manufacturing PMI results. So there's a lot of news for the Euro market this morning, and that could very well play in our favor, or show us the indication or the negativity in this case, if that's a true tweezer top, that we should start seeing negativity to the downside. So if that's a true tweezer top and a turning point, then we can take the low that we've had recently to that current candle high that we saw yesterday. You can see that the 23.6 is price upon resistance level here, where price actually consolidated on a number of occasions. That could be very well our intraday target. So where price is trading right now to that level, we're looking at a healthy 48 pips and change. Take away the spread, you're still walking away with a decent 44 pip market there. So looking at this, just going on the candlesticks alone, very negative because of that tweezer top. RMO has dipped, so you can see that even though prices reached a higher high, you can see the RMO pretty much making a lower swing. So that's not really good. It's still positive nonetheless, as I mentioned. We're still seeing upside, but this clearly, this fall, and you can see the MACD clearly over here too. Even though we've been moving higher, the MACD hasn't been moving higher, and that at a price upon resistance, that just smacks on negativity. So look for that intraday negativity now to play through. If you go to a 4 hour time frame, just move this up. So there we go. You can see a lot of negativity yesterday, and then as it stands at the moment now, start looking for potential shorting opportunities to these levels, or back towards the institution moving average intraday, as if the news continues the way it is, and if this is and if price cannot get above that all-important major support and resistance level, then we're more likely to see negativity coming through. Sterling against US dollar. Here again, yesterday's news also pretty much putting the brakes on sterling to the upside. I was expecting it to move to pull back, and sure enough, it did do exactly that. We started the day off with some negative news for sterling yesterday, and the one thing to remember is we're still above a major support and resistance level, and that is also the weekly fib retracement area. So as long as it maintains above the 50% retracement on the weekly, above a price support and resistance level, then we should still be looking for price to consolidate. We have, as I mentioned, all that news out this morning on Euro. If the news is negative, then you'll probably find sterling will probably gain a bit of strength on that outcome. So as it stands at the moment now, as long as price maintains about 50%, then we're still very much in a positive trend, still making higher swings. You can see where price right now testing a prior swing, but that's all above the major support and resistance level, and it needs to maintain above here to still look long-term positive. If we get a break and close lower, you can see the MACD already is below the zero line, which is telling us we're seeing negativity. But the RMO is still very much above the zero line, which is telling us it's still very much in an uptrend. And we are still above a major support and resistance in the shape of the 50% retracement on the weekly. So stay above that, and then we could see a realistic bounce and reattempt to the prior highs. Failure to stay above that today in particular, and we get price closing lower, that would look pretty negative, and the outcome would be that we should be looking downside towards these levels here to the 38.2 on the weekly, which will bring us back towards the institution moving average. Onto the US dollar Swiss franc, you can see the price has been falling nicely over a period of time here and consolidating around the weekly fib retracement level, and also at price support and resistance levels, especially the one that we saw here in early June of this year. And if I just zoom in here quickly, you can see that we saw the negativity yesterday, which is great, but I still wanted further confirmation, as I mentioned yesterday in my video, and we didn't get that. We wanted to see the 4 hour in particular finding further resistance and then continuing lower. And what did we get? We had an upside candle. So almost a tweezer bottom here in this case. Euro had the tweezer top. The US dollar Swiss franc, we have a potential tweezer bottom. And that coming at a major support and resistance level here in the shape of the June lows. And if that stays the same, we could see positiveness coming through on our smaller time frames, which you're seeing quite clearly here on our intraday time frames. The R squared not really complementing that as we speak intraday. However, the overall sentiment is still looking positive. We need that R squared to follow suit. I think we need to get above the weekly fib here at the 23.6 in order for this to be long term. However, we're still making lower swings on this. So even though we have a tweezer bottom here under support, which is effectively a potential reversal candle, we would like to get out of this consolidation band over here. There are a lot of resistance or consolidation in this area. If we do see that, you can see the RMO is still below the zero line. MACD has pretty much moved back up again. You can see that there's far less negativity on the chart. You can see it's been moving back up again. And as long as the US dollar can gain strength and get above that 23.6, then you'll notice that the MACD will maintain above here. And that will start telling us the grassroots levels of positiveness are coming through. And that all coming at a major support in this case, that would start looking favorable for the opportunities to the upside in the near term. So very, very important. We have the US unemployment claims this afternoon. We have flash manufacturing PMI. So there's a lot of news. And then we also have Jackson Hole today. We have day 1 of the Jackson Hole meeting, which is important. If you don't know anything about the Jackson Hole meetings that they have, please look into it. There's going to be a lot of news out today and also this afternoon. So tweezer bottom potentially on the US dollar Swiss franc, which is a positive sign but it's got to occur at a major support and resistance level, and we do have a consolidation low here. So look to see if there's any upside momentum for the foreseeable future into this weekend, potentially into Friday, tomorrow. We could starting to see a potential bounce here for this particular pair. US dollar Japanese yen on the news yesterday. We saw the bounce here again, and you can see the price actually consolidating now at the upper end. You can see over the past the week, in fact, price is actually maintained above the weekly 23.6 fib level, and sure enough, we could see that price is starting to move higher and reattempt now the 50% daily fib level. So as it stands at the moment now, look for US dollar upside and potentially a first target intraday of 53 pips as we reattempt the trend line low high, but also the daily fib here at the 50% line. You can see the RMO is still below the zero line, and the MACD is clearly above, so I'm seeing a buying. So intraday, drop to intraday, you can see there's a lot more positiveness on the chart with R squared complementing that, and we should be, if you're looking for a very aggressive trade against market sentiment, that would be the case. So look at your intraday chart. 4 hour, the only thing over here that we have not in our favor is the institution moving average, and that is where the 50% is trading right now. So also trading to prior highs. Ideally like to get above all this and then trade into the monthly high here. But if you want to be aggressive, enter, stop, and target quite aggressively to the high side here to the 50% before we see a potential pullback as we go into this afternoon with news relating to unemployment claims. We also have the flash manufacturing PMI results, and then we have the Jackson Hole meetings that are taking place all day today. So That's it, guys. Short and sweet. If you are using this template and any template out there, please back it up with sound money management rules. Very important. I'll keep referring it to you guys until I get it into you. You do need to back everything up that you do with sound money management practice. Very, very important. Keep it simple, as I mentioned. Look at any fundamentals there to see if it's going to tie in with market sentiment or price action on the chart. And just take it from there, guys. Candlesticks, fantastic tool. Please understand candlesticks. Please get to understand candlesticks particularly, because it's just another feather in your cap. It's just another tool that'll help us gauge where market sentiment is. And if we understand where the market sentiment lies, we are going to be there for a lot more profitable, because we know exactly where price is likely to go to. I'll leave you to that for today. I hope you have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.